Hey everyone, welcome back to Corporate Decoder. Today, Delta Airlines Inc. DAL just filed an 8-cake announcing a new credit facility, and it looks like they are setting themselves up for some serious expansion. Quick note, this is not financial advice, just my take on public filings for educational purposes. They just inked a huge new borrowing agreement, and it tells us a lot about where they are heading. So Delta Airlines Incorporated DAL has announced a new credit facility, basically a big new pool of money they can borrow from. This replaces their old credit agreement from November 2023. The primary reason for this new deal is to refinance that old debt and to fund general corporate purposes. This means they are not just paying off old loans, but also likely getting ready for future investments or operations. This new facility is pretty substantial. We are looking at a $2.65 billion revolving credit line. It's split into two main chunks. One is a 3-year loan for $1.325 billion, and the other is a 5-year loan for another $1.325 billion. What is really interesting here is the accordion feature. This means Delta can ask for a bigger loan up to a total of $3.65 billion if certain conditions are met. This flexibility says they anticipate needing more funds down the road, possibly for growth or to weather potential economic shifts. Think of it like a credit card with a very high limit that they can increase if they prove they can handle it. Now, how much will this cost Delta? The interest rate on the money they borrow will be variable. This means it will change based on market rates, specifically tied to something called an adjusted term SOFR, or another index rate plus a specific margin. Simply put, if interest rates go up globally, Delta's borrowing costs will also go up. For a company this size, even small changes in interest rates can mean millions of dollars in extra costs or savings. They also have a standby letter of credit facility. This is like a guarantee for things like performance bonds, and it remains uncommitted for now, meaning it is not something they are actively drawing on but have available if needed. Of course, with any big loan like this, there are rules and conditions that Delta has to follow. These are called covenants. The filing mentions affirmative, negative, and financial covenants. This is pretty standard for big corporate loans. Affirmative covenants are things Delta must do, like provide financial reports. Negative covenants are things they are restricted from doing, like selling off certain key assets without permission, and financial covenants are specific financial health metrics they must maintain. Two key financial metrics they need to keep an eye on are the minimum fixed charge coverage ratio and the minimum asset coverage ratio. Both are set at a minimum of 1.25 to 1. Let's break down the fixed charge coverage ratio. This is basically a measure of how well Delta's operating income can cover all its essential payments, like interest on debt, rent, and other fixed costs. A ratio of 1.25 to 1 means they need to have earnings that are at least 1.25 times the amount of these essential payments. If this ratio drops below 1.25, it signals they might have trouble meeting their obligations, and that could trigger a default on the loan. The minimum asset coverage ratio is also crucial. It looks at the value of a specific set of Delta's unencumbered assets, meaning assets that are not already tied up as collateral for other loans. This is compared to the total amount they owe under this new credit facility. Again, they need this ratio to be at least 1.25 to 1. This ensures that even if things go wrong, they have enough valuable assets to cover their debt obligations under this agreement. And these aren't just suggestions. The filing mentions that if Delta fails to meet these covenants, or if other standard default events occur, like defaulting on other significant debts, the entire outstanding amount under this credit facility could become due immediately. This is a serious consequence that Delta will carefully work to avoid. This new credit facility shows Delta is proactively managing its finances and preparing for operational needs, possibly signaling an optimistic outlook for the airline sector and Delta's role within it, despite recent headlines like the one from MarketWatch on the 12th of June. Talking about Delta underperforming competitors, this move suggests a focus on long-term financial strength. Analysts from UBS are seeing potential for significant EP's growth, raising their targets, which aligns with the proactive financial management seen here. This filing specifically falls under item 2.03, which deals with the creation of a direct financial obligation, or an obligation under an off-balance sheet arrangement. Essentially, this confirms that Delta has entered into a significant new debt agreement that will show up on their financial statements, impacting their balance sheet directly. Looking at the broader context, Delta's market cap is around $54.6 billion with a PSI ratio of about 12.1. This new credit facility, while large, is a tool to manage their existing and future financial needs. The fact that it is a revolving facility, meaning they can borrow, repay, and borrow again, and they can increase the total amount available, suggests they are planning for flexibility and growth, perhaps in anticipation of higher travel demand or strategic acquisitions like the ones we have seen in the airline industry. Large institutional holders like BlackRock, Vanguard, and Berkshire Hathaway likely view these moves as prudent financial management for a company of Delta's scale. What I am actually looking for is how Delta utilizes this newfound financial capacity. Will they invest in fleet modernization, expand routes, or perhaps pursue strategic partnerships that could further solidify their market position against competitors? Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.